Good morning, everybody. Welcome to another exclusive Value Investors Edge interview. This morning, we're hosting Torm plc, CEO Jacob Meldgaard, to talk with us about the product tanker markets and Torm's specific approach to this sector and upcoming capital allocation plans. Jacob, good morning. Thank you for joining us.
Good morning and good to be back.
Yeah, fantastic. It's great to have you back. Jacob, again, welcome. Let's start off big picture with the sector. We had a monumental, just an awesome 2022. How does 2023 compare to that so far? How would you gauge the current strength of the market?
Yeah, I think you raised for us, of course, a point that we need to recognize that last year our freight rates measured on our TC earning jumped a whopping 150% year on year from 2021 to 2022. And obviously, I think for us and for all investors, the interesting question is how long does this market have legs? And so far, our expectation is that 2023 will indeed meet what we saw in 2022. And in our case, our current guidance is also that we will be a little higher. I think if you look at on a TCE equivalent, that we will be approximately 10% higher yet again after this 150% jump that we saw. So I would say both 2022 looking back, but also now looking into 2023, it looks to be the strongest year on history for product tankers.
Yeah, it's been quite the run. I think 2022 was the all-time highest rate average, and 2023 is shaping up to be either number 2 or number 3 strongest year in the last 20 to 25 years. Let's talk a little bit about the seasonal curve this year. It's been a little bit weird. Normally, August is very weak. September is usually also pretty weak. This year, we've seen the opposite. What do you think is driving that? Is there some specific dislocation that drove that this summer, this fall?
Yeah, I think the fact that Europe kind of hoarded ahead of the implementation of the EU sanctions that came into force in early February of 2023, what we saw was that ahead of that, inventories in diesel were relatively low in the EU, and that the arbitrage of hauling both at that time Russian diesel, but also diesel from further away from the Middle East and from India was significant. And that's actually why we experienced a really strong rate environment in the fourth quarter of last year, especially on larger tonnages, also spilling into Q1. That was because Europe was simply hoarding diesel. That led to not alone could you, with that hoarding, you could meet obviously the demand, but you could also build inventory. So when we sort of came out of the first quarter of this year, inventories had been built on diesel in Europe, and we've sort of been having actually a headwind, you can say, in the transportation of diesel into Europe, simply because we only needed to transport, obviously a majority share, but the rest could be taken off the shelf from the inventories. And that point of that you can no longer sort of efficiently continue to bring inventories down was being met probably in July, August, coinciding with that you would then see volumes to reoccur being transported again to both meet the demand, but also to at least stabilize the inventories that you have been depleting. So I think it's very much a story around inventories, of course, not only in Europe, but also globally having come down, and that now is probably, of course, you can always drive inventories further down, but it's going to stress the system if you do it at this stage. And I think that is what had been the stabilizing factor and driving more seaborne volumes to come to the market here in August and September.
Yeah, thanks, Jacob. That certainly makes sense. It's one of the better answers that I've heard recently. We've been asking everybody, what's behind this weird, almost opposite sort of side of the curve. And sort of the fear is that, well, we've had these strong months here, in August and September already, and OPEC Plus is cutting and Russia's doing the export ban. Maybe we're not going to get a strong winter. Maybe there's no boost coming in November or December. What do you think about that? Do you still expect a normal sort of seasonal ramp up into kind of late November, December, or do you think this year might look a little bit different?
Well, I have to start with saying that I think every day we come to the office and see these rates, it's phenomenal. But to your question, I expect that we will see seasonality. Demand is ramping up. Inventories have been stabilized. They've not been rebuilt. And I think that the product tanker market is set up for potentially a stronger end of the year, simply also because you have low inventories. I can see that our customers, it's quite profitable to move the barrels that is there because it's a tight underlying markets on the commodities we carry, whether it's jet or diesel. You can simply see that there's not enough in some of the consuming regions for a winter season where you need. So I expect more volumes. Where they will come from is a bit the jury's out.
It's very interesting. I mean, if you look at the stock market, it's certainly not reflected in the way the shares have been trading over the last 6 months, but we'll see. So Jacob, it's always great to speak with you. I'm looking forward to the next one, and let's keep our fingers crossed for a strong Q4. Thanks for joining us this morning.
Yeah, thanks. Good to be here. Cheers. Bye.